Yo guys, this is FFX. Welcome back to another video. I think this is episode 7 of things I managed to learn regarding ICT concepts, and I'm just here to help you understand and simplify a few things, or add a few additions to things, or confirm things you might have not been sure of, if it makes sense. So guys, today I thought I would indicate to you how to truly identify bias, the next draw on liquidity or daily bias, in any forms of that. Basically, you just know where the next draw of price or liquidity is, in which area it can be from your features, Forex, synthetics, indices, and pretty much everything that you personally trade. And this is gonna be indicated based on let me just clean out the chart. Okay, how I personally approach the whole concept of identifying my next draw on liquidity or my daily bias is by we need to know where price is most likely to target, right? And this is not as fixed as you might think it is. People tend to think complicated, but it's pretty simple. It's just not fixed. It's the same thing every time, but not on the same price, if it makes sense. So the first thing I tend to do, right, is identify, or I mark out the first day of the month, which is 1st of June, right, 2023. And the most relevant price regarding our price range right on the daily time frame is the last 60 days, if it makes sense, which would be right here. This is called the ICT range, something ICT teaches in the core content mentorship. So we'll mark it out right here, like that. Okay, within this range, this is pretty much how far back in price, if you're day trading or scalping, you are actually required to identify your bias, if it makes sense. But we actually tend to simplify this or make it a bit more advanced by identifying first let's put it like this: within the 60-day ICT range, right, we divide this into 3 sections, right? The first 20 days, which would be here. Let's put it like this. I'm not gonna post anything just to make this all authentic. ICT 20-day range. Okay, let's put this like this. Okay, that's our first range. Put it right there. Our second range is the 40-day range, which is right here. Stay with me. Very impulsive. I don't know what's going on with this PC today. Maybe it's me. The 40-day ICT range, right? Okay, and then we've got the 60-day ICT range. In simple terms, this is how far back we are allowed to go in price to reference key areas or key zones in price, if it makes sense. In other words, anything outside this range right here, right, is pretty much irrelevant. For example, a fair value gap right here wouldn't be something we're focused on right now in time and price. And we break this up into 3 sections: the 20-day, the 40-day, and the 60-day range, right? So first we identify our 20-day range historically, and then we're only referencing to price that's within this range right here, if that makes sense for you. basically how we identify next on liquidity, we're going to be looking for order blocks, fair value gaps, rejection blocks, mitigation blocks, and all that within this range right here, in which price has not failed. For any price run that has insufficiencies is not filled price, therefore price has to revisit those specific areas for price to be rebalanced. For example, price cannot move or doesn't move straight on a downtrend with gaps that it does not revisit. For example, if you pay attention, this gap right here, price managed to refill it right here with this week, if that makes sense. This gap, this fair value gap right here, price, but when it's like this, it becomes inverted gap CB. Price managed to fill it right here. So in other words, price tends to revisit these key areas right here if you pay attention in future price, if that makes any sense. And we're only referencing the last 20 to 60 day range, right? So pretty much all you're gonna do, this is current price on the 16th of June 2023. You can check this whenever you got time, or on Monday. Price is gonna revisit this insufficiencies within this range and this current range right here, if that makes any sense. For example, how you set out your daily bias is where is price close to, and where does price look like it's most likely gonna target, if that makes any sense. For example, if you pay attention right now, we are currently in a bullish trend, and that's identified by change of character within this zone right here. Change of character, which is this right here. When price breaks a displacement area or a high or low, that indicates change of character, if that makes any sense. Change of character, that's how you confirm your trade. And then we tend to look for trades between the high of this, the high of the change, to the lowest low, right? So within this range right here, we look for fair value gaps and order blocks to take bullish trades, if that makes any sense. And this is identified right here by this. For this is a fair value gap entry going bullish. It's pretty much that simple. This even happened on high time frame. This is personally what I use to execute my trades even on smaller time frames. So basically now where we are current in price, right, we look for the highest insufficiencies and the lowest insufficiencies in which price can revisit between the 20-day range and where current price is. So if we're to mark them out right now, I'm gonna pause the video and then I'm gonna mark them out, and then you might indicate where you see this insufficiencies in price, because price is only going to do things. It's either going to target fair value gaps or highs where sell stops and buy stops are resting. For example, buy side or sell side liquidity. So right now I'm going to pause the video and then I'm going to mark out these zones for you. Okay, let's go. So currently these are the most clear areas in which I've identified in price. These are pretty much the easiest ones to see, if that makes any sense of where price currently is. We'd mark out this BC right here, this buy side fair value gap, but would have to wait for the day to close, or the day to close, which is Friday today. So this will be judged based on tomorrow's move, based on Monday's open, Sunday open. But in my time, it's Monday, because though we work on our New York time zones, price opens a bit different on different regions, if that makes any sense. But yeah, this is pretty much the most clearest. This is pretty much the most clearest, like, basics when it comes to where price is, if that makes any sense. So, and like with this information provided, first thing you need to with this provider, you need to identify where are we within price. Are we in a premium or a discount? And we identify that by identifying the high and the low, right? Which is pretty much here. I'm gonna mark this green. Yeah, so anything above the green line, which is the equilibrium, is premium. Anything below is discount, right? So within the premium area, we look for shorts. Within the discount, we look for buys. And for us too, so we identify these key zones right here as high probability areas in which price could reverse, if that makes any sense. And bear in mind, if that makes any sense, but for price, in order for price to react of any of these levels that are within the premium, change of character has to be indicated or initiated on lower time frame. For example, there's the daily. We could potentially go to like the 4-hour time frame and then identify, refine this right here. We refine this into our vividly gap. That was at daily. This is our current vividly gap on the 4-hour, because all this liquidity rates are marked out from the 4-hour, daily, weekly to monthly. But you don't have to sketch pretty much all of them, because it's just gonna make price a bit more noisy and stuff, you know. So if I'm expecting price to react of this sell side right here, this BG right here, how do I know that it's a significant for a reversal? Change of character within the zone has to be initiated, and that's initiated by when price creates movement like this, wipe off the high like this, and then wipe off the low, and then some form of a retest to a breaker, vividly gap, and order block. Then price has been initiated to be bearish, if that makes any sense. Personally, that's how I identify high probability setups and high probability bias, if that makes any sense. So as long as we are here in a premium zone, right, we are fixated on price moving bearish in a premium. But this can be utilized. Though price may be in a premium, you can pretty much simplify it or add a few more additions in which you could take like short scalps within this range against the premium bias, if that makes any sense. And this is done by you dividing the premium range in half. But as you can see right now, within a premium range, you have a premium and a discount. The highest probability buys are going to be within this area right here, and the highest probability shorts are going to be within this zone right here, which is the premium within a premium. This is a discount within a premium, if that makes any sense. So if I was to execute any shorts within this zone, I'd potentially anticipate or expect price to look to take out some, to fill in potentially this void right here, if it makes any sense. This void right here, I'll mark it based on like the lowest wick, because this will be regarded as sell side. That makes any sense. Sell side liquidity. I would anticipate price breaking this low right here, like this. Potentially like this, and moving bullish, targeting PD arrays within a higher time frame or within a premium. Sorry, if that makes any sense. For example, my first target will be potentially this buy side right here. So it's pretty much that simple. Just identify the nearest PD arrays on higher time frame, from the 4-hour, daily, weekly to the monthly. If it's not as clear, for example, if the daily is not as clear, as you'd like it to be, then you'd identify price on the weekly. For example, if you pay attention right now, supporting our bearish movement, if we expect some form of change of character right here, would be this. Let me remove this. Would be this CB right here. CB, it's a bearish fair value gap. Let me remove this. This would support our structure bearish, and price, if price stays below the high of the fair value gap like this, price basically shouldn't close above this fair value gap, then we remain bearish, if that makes any sense. And the higher the time frame confluence, the more it makes sense, if it makes any sense. Though overall we may be bullish, but that's pretty much how I go into like daily bias. Hope this wasn't as complicated as most people think it is, but it's just basically you identifying fair value gaps, order blocks on higher time frame, and looking for where price has not failed, if it makes any sense. So the easiest, or the first thing you should be telling yourself when this happens in price, just know that if there's some form of a gap within a range or price movement, know that that price range is regarded as not balanced. Therefore, price and future price will tend to like revisit those key areas, if that makes any sense. So we set those areas as targets in which price can potentially target or react off, if that makes any sense. So with that being said, hope this video was informative, and if you got any questions, just be sure to hit me up on the comment section, and I'll be happy to help you with any question that you like. Stay safe, drink water, and yeah man, have a good night, good day, good morning.